Listen up because we're talking Ubisoft, a major player in the video game arena. As of January 25th, 2025, the stock sits at €11.89. That's a gain today, but hold on. The past year has been rough, down 41.85%. Compare that to the CAC 40, up 7.30%. Yikes, we're talking serious underperformance. Back in the good old days, 2018 to 2021, Ubisoft was riding high above €70. What a difference a few years make. The gaming world is changing, folks. Competition is fierce. And Ubisoft's been grappling with delays, mixed reception to some releases, and that whole industry shift to online live service games. They've got hits, no doubt, but consistency is key in this business. Ubisoft isn't just some small fry, though. They've got a history, a whole library of big-name franchises. Assassin's Creed, Far Cry, Rainbow Six. These are names gamers know, but brand recognition alone isn't enough. Execution is everything. Right now, Ubisoft is like that promising athlete with all the talent but needs to deliver on the big stage. The question for investors is simple. Is this a comeback story in the making, or is Ubisoft stuck in a rut? Let's dive deeper, look at the financials, the charts, and the competition to see if we can find an edge. Alright, let's pop the hood and see what's really going on with Ubisoft's financials. We're talking hard numbers here, the kind that separate wishful thinking from cold, hard reality. First up, the PE ratio, it's sitting at 10.41. That's not sky high, especially for a company with growth potential. But remember, potential doesn't pay the bills. We want to see earnings, and right now, they're a bit anemic. Then there's the debt. Oh boy, the debt. Ubisoft's debt-to-equity ratio is a whopping 137.73%. That's a lot of leverage, folks. Sure, some debt can be a good thing, helps you grow faster, but too much and it's like a weight around your neck dragging you down. Ubisoft needs to get this under control. Here's the thing about these numbers. They tell a story, but it's not always a straightforward one. Ubisoft's got challenges, no doubt. Profitability has been inconsistent, cash flow needs a boost, and that debt is a real concern. But there are also glimmers of hope. Revenue is growing, driven by those online games, and they've got a loyal player base. Now let's talk charts, because in the stock market, a picture can tell 1,000 words. Right now, Ubisoft has support around 25 to 26 euros, a floor beneath which it doesn't want to fall. Resistance is up at 30 to 32 euros, a ceiling it needs to break through for a real bull run. Think of it like a price channel, bouncing between those levels. We've also got the moving averages, those trend lines that smooth out the noise. The 20-day SMA is above the 200-day, a potentially bullish signal. But don't get too excited. It's a tight squeeze and the stock needs to gain some momentum. Fundamentals matter too. Recent earnings reports are a mixed bag. Revenue growth is there, but profits are inconsistent. They're pouring money into research and development, which is good for the long term but hurts in the short term. And keep an eye on those analyst ratings. Right now, it's mostly a hold with a few buys sprinkled in. They're waiting to see if Ubisoft can deliver on its promises. So is Ubisoft a buy or a sell? That's the million-dollar question, isn't it? The truth is, it's complicated. This isn't a slam-dunk, no-brainer stock pick. There are risks galore, execution competition, that mountain of debt, but there's also potential reward. If Ubisoft can turn things around, deliver hit games, and get their finances in order, this stock could soar. But remember, folks, I'm not in the business of giving financial advice. This is for entertainment purposes only. Do your own research, talk to your advisor, and don't invest more than you can afford to lose. Ubisoft is a gamble, a high-risk, high-reward proposition. Are you feeling lucky?